mean, folks arguably that bought houses, say 2 years ago, I mean, they've gotten a lot of appreciation, but it's been a, very um, unusual times. I mean, a lot of very historical things have happened in our, nation
Yep.
and the financial system. And so, of course, you never invest expecting.
Jacqueline and Melvin Landry, and we welcome you to our podcast, Get Diversified. Throughout these series, we'll cover all the topics and questions you have about investing in apartment buildings, storage facilities, and mobile home parks. Being knowledgeable in these areas will help you feel more comfortable about investing. Apartment investing equals building wealth. Building wealth equals financial freedom. Achieving financial freedom allows you to spend your time with building memories with your loved ones. Let's face it, time is the one element in life that is limited, and you don't.
Hello, everyone, and welcome to another episode of Get Diversified. My name is Melvin Landry, and it's a pleasure to have you here again today. Hey, today, guys, we got a fantastic guest. We got a great show today, and I want to interview Mr. Jade Laye. So, Jade, welcome to the podcast, sir. How you doing?
I'm doing well, sir, and very happy to be here. Appreciate the invitation.
Good. Well, folks, hey, I want to introduce you all to Jade. Jade is an attorney, and Jade resides in Texas, and he's heavy into the multifamily real estate space. So, Jade, I'll let you kickstart off and introduce yourself to the listeners and tell us a little bit about you, sir.
Absolutely. Well, I'm based out of Houston, Texas. Grew up in Arkansas. Went to school there, university. Then went off to law school. Spent some time on the East Coast, and moved here to Houston around 2005-ish, around that time. And was working as a lawyer at that time, and didn't get started in real estate until around 2009. Just right after the housing crash. And so started off in single family, and I did that a while, and then moved on to multifamily. And so here I am now. I mean, I've been a part of over 3,000 units now, as a owner operator, general partner. And so, I've seen a good amount of things, seen, some ups and downs, even though, of course, some argue, well, it's all been an up market, since 2009. But, been some good challenges during that time. And so, had a great run, and just really excited about the future. I think real estate, I mean, it's still a great buy now. Of course, a lot of changes now happening in the market, but we're adjusting accordingly. And just excited about opportunities in the future. So.
Okay, good. Hey, man, well, thanks for sharing your introduction, telling us a little bit about you. Believe it or not, man, the trajectory kind of crosses full scale. You said the University of Arkansas. I was a student, and we may have crossed at the same time, even though we maybe had not connected in our journey in education. In
Sure.
addition, the notion of single family. So same here, right? Because I've been part of the single family journey as well, and been progressing from that standpoint. So, why don't you give the listeners a little insight in terms of when did multifamily really kind of kickstart for you from that standpoint?
Sure. I started off in single family. At that time, I knew about multifamily, but being a new investor, I think that was just, it felt safer and smaller. And you can kind of learn and cut your teeth. And so this was around 2009.
Okay.
I started buying houses. At that time I was using all of my own cash. And so, started out maybe just buying a house at a time, and then, graduated up and started buying multiple homes, and started a real estate company where, my wife and I were buying rentals in Houston, Memphis, Arkansas. And so, we probably still own about 55 or so of those houses. But around 2015 or so, um, I was buying a lot of houses. I mean, you can imagine having that many houses. So, I was always closing, always buying houses, closing, rehabbing. And so I felt like, man, is there a way to scale faster?
Mhm.
And that's how I was introduced into multifamily. So, and I basically repeated the same steps I did when I started investing in single family. I
Mhm.
got educated and all and learned how to do it from people who were already doing it on the level that I wanted to do. And so, I did that in houses and I felt like, man, that was very successful. And so I said, well, hey, let's do the same thing with apartments. And so that the impetus behind me moving to apartments at the end of the day, it was just leverage, scale. I felt, hey, I could do more in apartments with, less effort, less just, constant buying. And so that's what really drove me to apartments. Plus, the fact that at that time I felt like houses were getting a bit um, pricey, even though, of course, now I look back and say, well, no. But at the time,
Yeah.
you always, at least me, I always felt like I was, overpaying, even though now I look back and I was like, no, I really wasn't. But
Got real good deals.
right. And so,
Yeah.
I felt like, well, in an apartment, since you can force appreciation in multifamily, but you can in single family. And so I felt like, it was lower risk in multifamily.
Now, all the accumulation, you've accumulated a lot of properties, right? Single family and multifamily. Were you doing this while still doing a full time job? So you
Yes.
tell the listeners in terms of how
Yeah.
you was balancing, right? Work life balance, right? You're buying houses,
Yeah.
you're managing rentals and things of that nature. So how did you scale and how did it work for you within the inner portions of your system as you grew?
Yeah. I would say from probably 2010 till 2018, 2019. I mean, nah, man, it was no work life balance. At that time, I was still,
Yeah,
working a lot of hours as
yeah.
a lawyer, and I just made it happen on my off time.
Hmm.
Which I mean, usually meant I was probably working every day. And of course I had a wife that was understanding. I mean, I I don't feel like I was ever like an absent dad. I mean, I was always there, but I was just busy all the time. And so it didn't kind of start to, slow down until around 2019, 2020 or so, where, by that time I was starting to partner with other people that can help, take the workload off me. And so, over time, I've learned ways in order to, continue to scale and leverage, other people, their time and their expertise instead of, feeling like you have to do everything. So
Right. So the power of partnership, right, is a critical piece of this
absolutely.
overall puzzle. So as you kind of think back, man, you talk about 2019, 2020. Jay, what if you wouldn't have gotten partners? Where would you have hit a wall? I mean, where do you
Yeah.
think you would be today if you didn't get any partners as you were kind of growing your trajectory? So, I mean, any thoughts on that?
Yeah, I would have hit a wall in that, I just couldn't do any more until I sold off, the assets that I had. I mean, the houses were easy. I mean, that doesn't take a lot of time because I actually have a team that manages all that. So, that wasn't an issue. But when it came to apartments, definitely. I mean, either I would have hit a wall, or I would have had to basically hire asset managers.
Okay.
So which is always an option, but even now, I'm not at a place now where I'm comfortable enough to just hand off asset management, even to a trained employee, even though one day I believe I'll get there, but just as of now, where I'm at sort of in my maturity as an operator, I still want to be involved. And so, I'm not sure, but I would have probably hit a wall and just said, okay, Jade, for now, these are all the deals that you can be involved in, and until you start to exit some of these apartment deals.
Gotcha. So that leads to a good segue. So in 2019, 2020, you've kind of stopped from a single family acquisition standpoint. Was that the pinnacle piece for you in terms of the needing to scale really quickly, or was it before? Were you looking at what time frame was that transition really full scale for you? I guess.
Full scale in apartments.
Yeah. Yes.
Yeah, I would say that probably came around 2020, where I just kind of finally felt like, at least for me, the upside in houses just wasn't there anymore for me. For me, I've always invested in houses primarily for cash flow,
Okay.
because since you can't force appreciation in houses, even though, folks arguably that bought houses, say 2 years ago, they've gotten a lot of appreciation, but it's been a very unusual times. A lot of very historical things have happened in our nation and the financial system, and so of course you never invest expecting inflation in real estate like we've had over the last 2 years, even in houses, and so I've just always purchased homes for cash flow.
Okay.
See, and and by that time, by 2020, it wasn't enough cash flow in it to really justify continuing to buy houses at that
Gotcha.
time.
Gotcha. So you've echoed on one word more than one occasion here. Cash flow, cash flow, cash flow. That's why you're in the business, to grow and enhance your cash flow. That helps
Right.
build financial freedom at the end of the day. So, hey, thanks for sharing that. It's good that you reiterate that over and over. So our listeners, right, are listening in terms of the trajectory, right? We talked about your transition. We talked about the opportunity to be able to grow, and it just wasn't enough. So that's when you decided to move to multifamily to scale faster. So
Right.
good. Hey, so let's talk about that first multifamily opportunity you got into. You want to kind of share with the listeners and the
Sure.
viewers, how was that like? What was the experience going into it? And kind of, you're going from singles to very large opportunity. Kind of how was that transition for you, and kind of share how that went for you.
Sure. The first multifamily deal I did as a general partner, it was a 50-unit deal up in North Houston.
Okay.
That time it was probably, I don't know, a $4 million acquisition or so. That was my first time ever having to raise equity.
Okay.
So I think I needed about 1.5 million or so, and I had never raised equity at all. So, but by that time, I'd already joined a good investor network, of course, one that we're a part of. So I knew a lot of investors, but again, I didn't know if anyone would want to invest with me. And so, of course, there was some fear there. There was some apprehension, but at the end of the day, I felt confident, that I could do it, and I believe, I'm a man of faith, and so I believe, God walks with me, and I believe He would help me. get it done. And so I stepped out into the unknown, not knowing what would happen, trusting God. And so that first deal, me and about 30 investors or so, I was able to raise that money pretty easily. Um,
Okay.
and so we bought that deal. And, I say the first deal, it wasn't hard, but it wasn't easy. Up until that time, all the real estate I had ever bought was distressed. And so it was like you're getting it, pennies on the dollar.
Yeah.
And you're just like, hey, man, all I need to do is fix this thing up and rent it out. And I'm good, man. I mean, it was just easy.
Yeah.
And so, but
Totally understand.
this was the first time where it's like, well, no, you're not buying distressed real estate. You're buying a property at market, and you have to execute a value add plan to
Mm-hmm.
increase rents and all that. And so, it wasn't hard, but it wasn't easy. And, everything, of course, didn't go as planned. I mean, had challenges, but we stayed in that deal about 3 years, exited, did decent. I mean, it wasn't a home run, but it was a, respectable first deal. I'd say we exited that deal a little under 3 years, made a total return of about 35%, on that deal. So, investors were like, well, hey, Jade, I mean, wasn't a home run, but hey, man, we made a double digit annualized return on the deal. It was your first deal out the gate, Okay, hey, let's
Do it
try it
again.
again.
Yeah. There you
Yeah.
go.
And, so most of my investors on that first deal stuck with me. And so we turned around actually after, so let me back up. So we bought that deal in 2018. 2 months later, me and most of those investors turned around and bought another 50 unit deal.
Okay.
So it was like, I was still buying deals all along. I mean, if hard or easy, I just kept buying. I kept
You kind
finding
of
the best opportunities I
taking action.
could, kept taking action. So now that next deal, that one did great. I mean, we exited that one in probably 3.5 years and made about, I don't know, 130%,
Mm-hmm.
on that deal. And so that was like the first one that was just like, okay, now that one worked how we thought it would in the end. It didn't work how we thought it would while we were in the deal, and so I'm kind of learning all these things
Yeah.
along the way of how apartment investing was so much more different from houses. See, and so, but I mean, after that first deal, every deal we bought, it just got better and better and better. Um, and, and so I've been fortunate enough to, grow my investor base along the way. So, raising equity got easier and easier to do until now. I mean, we're, doing the big deals now that we kind of never thought that we'd be doing in the beginning, but here we are.
Yeah, that's a fantastic story. A few things I want to kind of correlate here. So,
Sure.
man, I just wonder, man, like, man, are we indirectly related here? For some odd reason, you said distress housing on the single family front. Those are the things that I concentrated on when I got into single family. Was targeting REOs,
Mm-hmm.
houses that were in distress, back taxes. Very, very, very little pennies on the dollar in terms of growing that. That allowed me to really get into the ecosystem of dealing with houses in general and real estate,
Sure.
and it did very, very, very well from that standpoint, right? You also mentioned about your first deal, right, that you kind of got into. Think about my first trajectory getting into an opportunity in multifamily. One of the first deals I invested in was one deal that you was a lead sponsor for.
Okay. Okay.
So, and now, we're involved. It comes full circle now. So there's another deal that you're lead sponsor for. I'm invested in it because you guys bring forth results. You guys have a strong team. You guys are doing well in multifamily, man. So, a tribute to your leadership and your growth.
Thank you.
And yeah, man, it seems it's coming full circle for you. So, and hopefully, I kind of follow and pivot along that projection as well. So,
Absolutely.
yeah, man. So let's talk about, man, when you kind of bring together to put the team in order. So, kind of what's your, I guess, your original kind of methodology as you kind of look at an opportunity, know you have to put a team together to get it from beginning to end. Any kind of just nuggets you want to share for the listeners in terms
Sure,
of the
sure.
method to the madness from your standpoint?
Sure. Well, kind of the way my journey went into partnerships, when I first started out, those first couple of deals that I did, I was the only general partner, which was kind of unusual,
Mm-hmm.
for a first time guy out of the gate to go it alone. But I didn't really go it alone. I mean, I had a great team of advisors around me.
Mm-hmm.
Um, And but I quickly learned that if I wanted to continue to scale, that I needed to start partnering. And so my approach has always been, number one, I like to have a broad network of people that I know that are in the space. And so and over time, as you get to know people, you kind of tell, okay, yeah, like this is a guy or a gal that I could partner with on deals. I mean, we think alike, share a lot of the same values. We put our investors first,
Mm-hmm.
even if it means ultimately that we as general partners get hurt or we don't get anything. I mean, if we can find a way to keep our investors happy, that's what we want to do, because ultimately we're not looking at this as just one-off deals here. We want to help people grow their wealth. So if they're happy, it allows us to continue to grow our wealth. And, my rule has just always been treat other people the way you want to be treated. And so even as a general partner, hey, I treat people's money like I would want my money to be
No, be
treated
treated.
in a deal. So, um, and that's always worked for me. So as far as partners go, I look for people that just have those same values, and people that I've known, a while, that I've had opportunity to watch and, and see, okay, well, they're experienced. They've been, through some things, and they're still here, and they still have maintained their integrity, and they,
Yep.
all those things. And so the way that my journey went. Okay, so I started out partnering alone. Then I did a tenants in common, or what we call a tick
Okay.
deal. And that was kind of my first experience dealing with other people, which is not quite the same as just a general syndicated deal. But as far as partners, you still have to work with the other tenants in the deal, because they're basically a part owner, and you have to agree. And so that was my first kind of partnership, which, I mean, ultimately that went very well. Actually, that deal was a deal where, like, my first LP investor on my first deal, the first lady that agreed to invest with me as an LP, actually turned out to be one of my partners on that
Partners. Okay.
tick deal, because
Okay.
she was like, hey, Jade, I have a large sum of money. I don't want to do it as a syndication. I trust you. Can we structure this as a tick deal? So, I mean, that deal did great. And so after that, I continued, but I started out then, I was like the junior general partner on a team of more experienced guys.
Mm-hmm. Okay.
So that's kind of how it started out. So my approach then was that, okay, I wanted to know who the, lead
Sponsor.
GP was on the deal. And I wanted to make sure that that was a person of, high integrity and that they were plugged in to the same network people that I was plugged into and that other people knew them and could speak to their, experience, values and all that.
Okay.
So I probably took that approach probably my next 3 deals or so, because at that time I was too busy on the deals where I was the only
Oh, yeah.
partner,
Wow.
right? So I was like, okay, I can't be a lead general partner on these other deals, because then I'm the guy that's having to orchestrate everybody, put it together, and all that stuff. And I didn't have the time.
Yeah.
So I played like a junior GP
Okay.
role, and so of course I would raise equity, but I would also help with asset management, like legal and that kind of stuff. But I was not like, a lead general partner at that time, because I just didn't feel like I had the time or the capacity. Okay. So I did that a while. Well, in the meantime, some of my early deals started to go full cycle and we started to exit. Well, I was like, oh, okay. Well, now, man, I got a lot more time. So I said, well, Jay, now you can start lead sponsoring again. And so that was probably, I don't know, 3 or 4 deals ago. And I just said, oh, okay, well, now I'm back to being a lead, except this time I'm going to do it with partners. So even though I'm a lead, I'm still not having to do everything. So my approach that time was like, okay, well, I need, 2 or 3 core partners on my team. And these are folks that I've known a long time that I trust and that I know them. Okay.
I trust. Yeah.
And we're like lead partners. Okay. And so, unlike a lot of other people that do like formal partnerships, I've never done that. I've always let all my partners know, hey, listen, I'll do a deal with anybody I'm comfortable doing a deal with. I'm only married to one lady. And I mean, that's the only kind of marriage I want to do.
Yeah.
Okay.
Yeah.
So as far as business, I didn't want to be married to anybody. And so I said, okay, hey, I'm going to do deals with anybody I want to do deals with, but I wanted to have a list of people that I said, yeah, these are like my top people here. And of course, since I had spent years prior in the same networks, meeting people, getting to know them, going to events, month after month, year after year, people saw me, got to know me. Okay, yeah, this is a guy he's been around, still around, and he's gonna be around. Those are the folks that I was like, okay, here's my list of those people. And so these are like my go-to
people. Yeah.
people, and we can then build out a team around us if we need to do that. And so that's been my approach probably these last 4 deals or so. I've got like a core group of folks that I know that are strong, and they can raise equity, they can asset manage. I mean, they can do everything, and we really align. Those are the people that I just go to first. So my approach on just finding a deal is, when I'm in acquisition mode, I'm chasing deals. I don't think about, okay, like who am I going to partner with on this deal? I'm like, I have the network of people around me that I know I can close any transaction.
Okay.
I just have to find the deals. And so I just go out and I find deals. And then once I find an opportunity, that's when I call people around me. So it makes it a lot easier to find deals, in that, most of the times, hey, I'm the only one that's vetting the deals and everything. And then I just bring a deal to, partner and say, hey, this is a deal I found. Here's everything. Take a look at it. And if you're interested, let's go. And so that's what my approach is now.
So to recap for the listeners here, so over a time trajectory, right? The confidence has grown from your viewpoint,
Yes.
right? Being able to close a deal, and you've kind of interviewed or pre-interviewed indirectly, right? Potential partners who you want to work with, right?
Mhm.
And again, in aligning with your core values, our critical core piece in terms of making it work. You
Absolutely.
are, and you're from your core role where you sit today. You're heavy on the deal sourcing side, right? The opportunities come to you. You've done full cycle opportunities and deals. They probably pop up in your inbox probably once every probably 15, 30 minutes, probably on a daily basis. I'm sure, right?
Yeah. Well, they've slowed down here over the last 6 months, of course. But yeah,
Yeah,
man. I mean, you see deals all the time.
all
So
the time.
yeah.
So let's think about the full cycle deals you've had where you were the only kind of general partner starting out. Do you have any more of those deals that you're managing, or everything that's been kind of single? Jade is the only guy on leading it. Have all those gone full cycle, or you still
Yeah.
have a few of those? Okay.
We've exited all those deals now. So everything I'm in now is all, I'm either I'm still in my last deal where I'm like, more of a junior general partner,
Okay.
And so I mean over its time I've kind of been moved up to like one of the lead general partners, but at
Okay.
least I started out as, a junior guy.
Okay. Okay.
Yeah.
Okay. That's good. Good to know that there's a line trajectory, right, in terms of moving up from that standpoint. So,
Right.
another question for you, Jay. What
Sure.
advice would you give to a newcomer coming into the space, wanting to garner success, right? But they're still trying to kind of figure that out. What advice would you give to a young person out there who's looking to get into multifamily, looking to grow to kind of get to where you're at today? Any advice you want to share with them?
Sure, absolutely. First, I would say, get educated, get around a large network of people that are doing the types of deals that you want to do. Um, the larger the network, the better. I
Mm-hmm.
think in multifamily, you need, this is a very equity intensive space to play in. So
Mm-hmm.
you either need a lot of money or you need access to a lot of money.
Yeah.
And most times that comes through access to people. Uh, you don't always have to know all the people that have the money, but you need to know all the people that know the people that
Yeah.
have the money.
Okay.
So, but being a part of a network of kind of high caliber people that have access to capital that want to invest in apartments, that gives you the greatest chance to kind of get on a, to beat the learning curve or make it as short as possible. So get around a large network of people that are already doing what you want to do. And then, I mean, get educated. I mean, get in there and, multifamily is not a space, unlike single family where you can kind of go it alone. Multifamily is not that game. I mean, you have to be able to work with people, work well with others, talk to people, engage, be likable, all of that. I mean, it's, a part of it. And so you have to get in front of people. And, yeah. And so like when I joined the networking group that we're a part of, I mean, I treated it like a job. I was there to meet everybody, man. And I came to all the in-person events, I was there, man. And so, and I did that for years.
Yeah. Yeah.
Before I did that for like a year and a half before I even started chasing deals. And it was about 2 years before I actually did my first deal as a general partner. By that time, I had already spent 2 years getting to know people, you know. And so do that. And then, I mean, once you're educated and once you're in the right networks of people, then it's just a matter of taking action.
Yeah.
Knowing that, hey, no deal out there. It's always risk involved
In every deal.
in every deal. And some people don't really understand this, I guess, being a sponsor or a general partner or whatever, lead, whatever you want to call it. But I mean, you have to be comfortable with a certain amount of risk, and it's more risk than just being an investor, right? Because you're actually out there raising money from people. And so you mentally have to be able to deal with the fact that, hey, I'm raising money from people, but there's no guarantee that any opportunity I bring them is going to pay off, because you don't know. And if anybody approaches you saying, man, this is a guarantee, it's a slam dunk,
you should probably run another way.
That raises some red flags.
Red flags.
Because they don't know. And so, but some people are just able to deal with that. And those are the people that I think do well in this space, is, that they understand what they're bringing people. They're bringing them in investment opportunities, not investment guarantees. And of course, you base your investments on data, and we look at all that. But at the end of the day, you don't know. It's not a guarantee. So, but if you're comfortable with that, then you can still go out and raise money for investments. And of course, I always put my own money in the deal. So, I mean, hey, I put my money where my mouth is. Hey, if I believe in the deal, if anybody's putting money into it, it's me.
You, right? There you go.
Right. So, hey, it's none of that no skin in the game stuff. I mean, we don't play that. So everybody's got skin in the game, and we go out and buy in the best markets, the best opportunities we can find. And we get to work to execute a business plan where, hey, over the next 3 to 5 years, we feel confident we can find some exit here where we can make a good profit. But beyond that, hey, it's an investment. It's a risk. I can guarantee it won't pan out how your pro forma says it's going to pan out. It never works.
For better or for worse sometimes.
Right. It's never what's on paper. So
yeah. Indeed.
Mm-hmm.
Hey, man, that's a fantastic delivery and analysis, and letting folks know an investment is that, right? It comes with some risk in some way, shape, or form from your standpoint, right? Your role, even as junior GP or lead GP, right? You want to make sure you got the best optimal team to help execute that plan. At the end of the day, taking care of who? Our investors, right? Our investors first. Any account. So, man, fantastic analysis there. So, one more question, man, I want to kind of throw at you. Think about your role as a junior GP. Think about your role as a lead GP. What's some of the best advice that's been given to you as a junior, and what's been some of the best advice that's been given to you as a lead GP? Think about it.
Yeah. Well, as a junior, I would say only join teams with, people, more experienced people that you respect and that you can learn from, and they can help you to grow. Also, but then as a lead GP, I would say, I typically like to work with junior partners that I can see sort of kind of the same things, some things in me and them, where their, integrity is high and they just want to do a good job for their investors. They're not just looking at themselves and what they can get. I would say even now, and this is make this kind of outside of what you asked, but I mean, it's still important is that even now, I mean, hey, I'll still I'm still open to joining a team as like a junior GP because even now, hey, it's some guys out there that, man, I can still learn from and, or it may be guys out there where, hey, I don't want to be a lead GP on every deal
Mm-hmm. Okay.
just because I don't want to do that. Right. And so,
yeah.
Right. It's a huge commitment. And so, it's hard to do that on every deal back to back. So don't think that it's only one way. Okay, I'm going to be a junior until I'm a lead and then I have to be a lead all the time. No, I mean, you can take every opportunity one at a time and knowing that you can always learn something new from even inexperienced people because a lot of people in our space are very accomplished in whatever fields that they're in because it's not easy to even get to the table or to get in the room of people that are investing in these types of deals. So if you're even in the room, that tells me, well, evidently you've been very successful in other areas of life that's enabled you to get into this room. So I automatically think everybody I meet, no matter what level of experience that they may have in apartments, houses, whatever, but I can still learn something from them, And so I think that having that attitude will really benefit you as a junior or a lead in that, it gives you a humble attitude and people gravitate towards that and they like to work with people like that. And so you'll always have opportunities to do deals because people always want to work with, people like that. So,
Okay. All right. Well, Jay, hey man, thanks for kind of providing some insight, some added insight from the perspective of being a junior GP, even a lead GP. It's good to see that the trajectory of your experience is kind of going full circle, right? You've been in the trenches as the one man leading the show, and also as kind of leading the team from that standpoint. And it's good to see, man, your growth and things kind of progressing through, man. So, when I kind of jumped into the ecosystem that we're both a part of, man, you were one of the guys like, man, this guy's really, really moving the needle and changing the game. So that's good to see.
Appreciate
It's
it,
also
man.
good to see, man, that we've kind of followed similar paths, believe it or not, there. So,
Absolutely.
from that standpoint. So Jay, one last thing, man. How can folks reach you? You want to kind of share some information on you so we can add to the show notes?
Yeah. The easiest way to get me, man, hey, you can find me on Facebook, LinkedIn. My LinkedIn profile, I actually have two. I have one that's as a lawyer and then the other one for my real estate company. LinkedIn, I'm under Laye Capital Investments. And Facebook is just my name, Jade Laye. Feel free to message me, uh, connect there. And then my email address is just my first dot last name, J.Laye at layeinvestments with an S.com.
All right. All right. Thanks
And
for
that's how you
sharing.
can reach me.
Sounds good, man. Thanks very much. We'll add those to the show notes as well. And Jay, on behalf of myself, my wife Jacqueline, and the Moreland Capital team, man, I want to thank you for being a part of the Get Diversified podcast. And hey, man, it's been a pleasure, man. Always happy to chat with you and always learn some more about the trajectory, which has been fantastic.
Thanks, Melvin.
Thank you, sir.
All right.
All right.